All right, my friends. So today we are going to be doing a double tutorial on Market Cipher and on balance volume at the request of Hoop Money Trade Alerts. We'll be looking at Market Cipher first. If you guys wanted to download Market Cipher, we'll start with that. You can do so in Discord, actually. I have a discount code for it. If you go to the free resources section right here in the Discord under important info, should be two sections above the trade alerts, the Hooters VIP section. You'll see that there's a link right here. Download Market Cipher code HOOT for 15% off. So make sure you use code HOOT at checkout. And this also does support my channel. I don't really get many clicks on it, but it does support the channel, and you do get that discount. You don't have to download Market Cipher. There are free versions. Don't tell Crypto Face, the creator of Market Cipher, that I told you guys this, because this is not necessarily the most legal thing. I don't know. It's like a ripoff. But regardless, Vu Manchu as well has some good Market Cipher type indicators. So we'll see that as well. We'll put on VMCA and VMCB. All right. I'm just going to get rid of Market Cipher just to see if it's any different. Yeah, so VMCA is nearly the exact, it's the exact same indicators. They don't have as many yellow X's, it looks like, but for the most part, it's pretty much the same. You can see Market Cipher A uses the top part. It's actually aligned with the actual price action. Market Cipher B is an indicator on the bottom. So VMC Cipher A, not too bad, and this is a free version. So VMC Cipher is what it's called, right? If you don't want to pay for it, it is pretty expensive, right? Now, VMC Cipher D, again, it's pretty much the same thing as VMC or Market Cipher A. If we zoom in right here, yeah, pretty much the exact same thing. I'm just trying to see if I see any major differences. So, yeah. Pretty much the same thing with the blue wave and the VWAP. So if we're looking at the red, the green, and then the blue waves, exactly the same. The green waves here is actually only a line, right? So this is only a line. It's not actually shaded in green like Market Cipher, but it's pretty much the same thing. It looks like right here it stayed in red money flow a little bit longer than Market Cipher stayed in red money flow. And some of these oversold green dot signals are not necessarily the same. They also have divergences in Market Cipher or in VMC Cipher. That's these red lines. So these red lines show bearish divergence, bearish divergence, bearish divergence, right? All right. So VMC Cipher is the alternative to Market Cipher. Honestly, I would use VMC Cipher personally. But Market Cipher is really great because it has these RSIs right here. So you'll see me talking about these RSIs on stream a lot. And when these RSIs are tight and together, it's better. And when they're spread apart wide, it means the Market Cipher indicator is not as good. These usually mean that it is a good time to go short. So right here, the split RSIs means it's pretty good time to go short. It did look like it did fall after that. So, all right, we can move on from here. So I'm going to get rid of VMC Cipher B right here. We're going to just leave up Market Cipher A, and I'm going to continue this tutorial. So we have advanced micro devices. I just picked a pretty random stock right here, and we're looking at the monthly chart. So for Market Cipher, the monthly chart, 3-week chart, 2-week chart, 1-week chart, daily chart, 4-hour chart, 1-hour chart, 50, etc. In that order, right? That is from the most accurate to the least accurate. So the longer time frames are always going to be more accurate than the lower time frames. Now, with something like AMD, it was in such a crazy bull market right here, all the way from 2016 up until 2022, like right now. So it stayed in pretty green money flow, but price action doesn't always move this way. So when a stock is running like parabolically like this in the long term, like AMD did, Obviously, Market Cipher is not going to be as accurate because it's literally just staying in this overbought state for quite some time. And the S&P 500 is even worse on the monthly chart. It literally just stays in green money flow, right? So AMD is actually a little bit better than the S&P 500 right here, yeah, so you can basically see how stocks only go up if you're looking at this the monthly chart on Market Cipher. I mean, it's just constant green money flow. This is just the Federal Reserve money printer index right here. They've just been printing money, injecting it into the S&P 500 for quite some time right there. So usually what that means is that these green dot signals on the monthly chart, they're usually good ones to just hammer it in. Just always be hammering it in. It is breaking its long-term trend right here, advanced micro devices. So right here would probably be where I actually start considering the short position a little bit more, because when this was running up, you can see these EMAs. So this is Market Cipher A right here. Those are EMA ribbons. So you hear the terms exponential moving average, like the 10 EMA, the 25 EMA, the 50 EMA, etc. So these are different EMAs, and they show different types of trends. Before, the EMAs were never even breached, right? The lower EMA right here, I'll just draw a line along it so you guys can see. This lower EMA, it was never breached. Even these upper EMAs acted as bouncing points. I only really consider shorting positions once it breaks these EMAs, right? On whatever time frame I'm looking at, I want to see it break the EMA ribbons first, like it is right here. You can see it's breaking down below, and that is when I might consider, going short on something like that. Now, do I want to go short on it right now because it's been in a pretty long decline? No. What you're looking for here is a bounce. You don't want to, I usually want to go short up here, right? You don't want to go short down here, but finding that short position up there, not always the easiest thing. So when you're looking at it this way, where it breaks the EMA ribbons, you are basically detecting the start of a downtrend, and you want to short on the next bounce. So with that, we can get into Market Cipher B right here, and that will help us predict when exactly this thing might bounce and if it's close to bouncing. So the first thing I want to look at on Market Cipher is the yellow right here, because this VWAP is usually going to be pointing in the direction that price action is going to be heading. It's a modified VWAP. They calculate it a little bit differently than a normal VWAP. Obviously, it's being used on a indicator down here. Usually VWAPs are charted with the price action, so it's a little bit different, but this is the indicator, and what it does is whatever direction it's pointing, you continue it out, and that is where price action is likely to be headed based off of current momentum. So it's a momentum indicator, and it tries to predict where flows of price action is going to go. So right now, so what we're looking for is VWAP crossovers, because VWAP crossovers is what prints these red and green dots on Market Cipher. So when the yellow crosses over to the downside, that means that a red dot gets printed, right? But if the same thing happens to the upside, VWAP crosses over to the upside, you get a green dot printed there, right? So the blue waves right here are momentum waves, and the VWAP points in the direction where they think the momentum wave is going to go. So the VWAP is always going to come up first, right? So it's going to point up first, and it's going to go to this 0 point right here, and then likely the blue wave is to follow. So the yellow VWAP is usually what predicts the next price action. Now, it doesn't always do this, so that's why you have to risk manage regardless. Not always do these signals just work. That's where the yellow X's come into play. So let's just say you get a green dot signal. It's oversold right here, but it just continues to sell off. Market Cipher will do this thing called a yellow X on Market Cipher A, and that'll just tell you that it's being manipulated. It's not following normal price action, and you should either just avoid the trade in general or go short. So yellow X's mean avoid the trade or go short. Next thing we can talk about is the money flow index. That is the red money flow and green money flow. The red money flow means that it's easier to break support levels and go to the downside. Green money flow means it's easier to break resistance points and go to the upside. It's going to be hard to show you guys this on the monthly chart. So let's just move into, let's just say the 4-hour chart. I like the 4-hour chart. I like the daily chart. I like the 12-hour chart. I like the weekly chart, and I like the monthly chart. Basically all the normal time frames. But I like the other time frames as well, just to see what might happen at a different time frame. So the 4-hour chart, for example, might predict. So 4-hour chart got a red dot back here on AMD, but maybe the 12-hour chart doesn't have the red dot. Okay, it already has it, but maybe the daily chart doesn't have it yet. So the 12-hour chart getting the red dot right here could help predict the daily chart, right? So you can use shorter time frames to predict what might happen on a later time frame. So that is another way that you can use this. But anyways, going back into the money flow index, which is what we wanted to talk about. Red money flow, again, it means that support levels are easier to break. Like right here, it broke that support level. Right here, it broke the support level, went down a bit more, right? Right here, it forms a higher low. And look what happens to the money flow. The red money flow comes up really, really hard, right? So while it's still easier for it to remain bearish right here, and you can almost see that with the EMA ribbons. The EMA ribbons, when it's bearish, it turns gray. When it's bullish, it turns blue and white. You can see that with the EMA ribbons right here. It basically bounces off, continues being in that downtrend slightly. Still some risk, right? But this is where you can actually take on some more risk and actually predict the trend change, because what you saw was that the money flow, right? The red money flow came up, and then you got the green dot signal right here, right? So money flow is increasing, and that's what you want to see, right? RSIs are nice and low, and then that's when you can actually go long and predict that move from red to green money flow. So that is my favorite way to use Market Cipher, using that money flow index. Try to predict where the trend could change, get in on calls on the low, and then hopefully get in on puts on the high. Personally, I've had more success finding where things bottom out and going long towards the bottom than for predicting tops and calling tops and playing shorts and playing puts. It could just be because I'm more used to just buying things and looking for something to go up. That's just my trading strategy, right? I barely ever short. I mean, I just find shorting in general just very, very risky, and a lot of times the risk is not worth the reward. But anyways, that's besides the point. Let's just try to find a different place. There's been lots of red money flow here, but I want to show you guys a different place where there's lots of green money flow, because that means that resistance levels can be broken through very easily. So right here, green money flow, right? This whole section. And you basically see that every resistance level, like right here, gets broken through to the upside. Right here, broken through to the upside, etc., etc., etc. You can see that the blue waves are decreasing up here, right? So you can see there was 3 consecutive blue waves decreasing right there. You can see that the money flow was coming down, right? It came back up, but it was still trending down, 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 down. So the trend of the money flow was down. The trend of the blue waves is down. RSIs are still high. That's when you want to start considering either taking profits or, getting out or going short, right? So that's the money flow. Let's talk a little bit about the blue waves here, because I don't think I touched too much on them. I told you how they're related to the yellow, where if the yellow crosses over, it gets a blue dot. But I didn't really tell you what exactly they are. So they're momentum waves, right? It basically shows where the momentum is. So if the momentum is on the upside, it's going to be above the 0 point, like right here. If the momentum is on the downside, right here, right? So this looks like a very, very so just looking at what I'm seeing on Market Cipher and relating it to price action, it stayed in this overbought momentum, right? So it was probably a pretty violent rally to the upside, but there was even more momentum to the downside after that. So it was probably met with a pretty hard sell-off. So let's go back and look at the chart. I promise I'm not cheating. Yeah, it's a pretty nice run up right here, right? It stayed in this overbought territory for quite some time, moved from 101 to 125, 25%. It's a pretty big cap, so that's a pretty solid move. And then right here, it absolutely sold off with that red momentum. And you can see the momentum was changing somewhat. It goes from bearish to kind of bullish. Momentum candle comes back up. So these blue waves try to follow price action, but they keep it in a linear fashion, right? So it can't like just go parabolically on Market Cipher. Where did my indicator go? I lost Market Cipher B there. Weird. Anyways, yeah, it's obviously not going to break out of the indicator. It's going to stay between 100 and, or it's going to stay between 100 and negative 100 right there, right? So you can see the the scale on the right hand side. Whoa. And I believe it uses the same scale as RSI. So let's just actually check that out here. Let's just pull it up on Market Cipher. So RSI, relative strength index. So relative strength index uses, so under 30 means that, okay, so it doesn't use the same as that. So I take that back. But it's the same concept, right? So the 0 point on the relative strength index is 50. The 0 point on Market Cipher is 0. And then the oversold point on relative strength index is 30. The overbought point is 80. Here, the overbought point on Market Cipher is, let's just erase it and pull it up on the chart. So the overbought point is minus 60 on the downside, and then 60 on the upside. So a bit different scale there, right? Going from negative 60 to 60, but same concept. All right. So we've gone over everything else. One more thing right here. If it goes below 160 on the blue wave and it gets a VWAP crossover to the upside, it's going to give this thing called a big green dot. It's an oversold green dot. It means that price action is moving back to the upside, but it's also oversold. So it's a higher conviction signal than just a normal green dot right here. All right. So let's talk about some other strategies that you can use on Market Cipher. If you just ignore everything else and you look at the blue waves, you can use big blue wave, small blue wave to also predict price action to some extent. So for example, right here, big blue wave, small blue wave, and that is another strategy that could lead to some upside. And right here, you can see that, well, the blue waves are uptrending, right? So it's a little blue wave, big blue wave. So that also means that it's more likely to stay in an uptrend rather than sell off. But if we find a different spot where it goes on the upside, big blue wave, small blue wave, for example, like right here, so we'll circle it on the chart. So this was the big blue wave, and this is a small blue wave, right? Then this would be a good time to go short right here. And as you can see, the red dot hit, you go short, it actually ends up forming a lower low, right? But it doesn't always work out, right? It doesn't always work out. So this is in red money flow. So that means that stop losses, or that means that support levels are more likely to be broken through. There was a big blue wave right here and a small blue wave right there. So usually that means that there's more upside to come, but it didn't work, right? So that is a point where it just doesn't work. What ended up happening was it just kept this momentum wave kept coming to the downside. And you can actually look at the more macro picture here instead. Big blue wave, smaller blue wave. And that's when it actually started to work, right? That's when it actually became a better signal. And on this so big blue wave, smaller blue wave, this ended up marking the bottom of this entire downtrend, right? And then it starts moving right back up after that. So big blue wave, smaller blue wave is another way to use market cipher as well. And we have not even gotten into really the market cipher A besides for the EMA ribbons. So we'll go over that right after we are done with this. This is already a 20-minute video. Holy shit. That's crazy. Well, I hope you guys are still watching and learning because there's lots of good information here. So now we're going to talk about the RSIs because the RSIs can be useful when they are nice and tight together because that means that market cipher is going to be a bit more accurate with their signals. So when you have very split RSIs, it could invalidate a signal. So I'm going to try to find a point. Looks like there's not too many points. For example, right here, if you did big blue wave, smaller blue wave, I probably wouldn't have taken it because these RSIs are pretty split right there. I would have wanted them more so together, but I'm going to try to find a point where this works out a little bit better here. Honestly, it's not looking great. See if the daily chart has anything. Daily chart might have it. Okay, so here it is. Here it is. So right here, RSI is nice and tight, oversold green dot. You want to hammer this in, right? RSI right here, nice and tight, oversold green dot, and the RSI is also at a low point. You hammer that in. That you buy the call option there, right? You buy that call option right there. But right here, this is where you can go short, right? Because you've got the red dot, split RSIs. That usually means go short right here. So split RSIs right there. You can go short right here as well, right? Split RSIs, red dot, you can go short. Right here, maybe not. The RSIs are nice and tight together. Might have still been a good short. We'll see. Yeah, so that was still a good short. I mean, what you could have just the way you could have justified that is just the fact that it went from green to red money flow. You're just shorting a pop in a bearish trend, right? So it's already bearish. It popped back up. You're just shorting the pop, right? So that's kind of how you could have played that. But think about it this way. So the purple RSI is going to be a more reactive RSI to bigger moves. And the red and green RSI, that is going to be that's what you want to base your indicator. That's what you want to base your what's it called, trades off of. If, for example, right here the RSI isn't really oversold at all, right? Yeah, it's at 52 right there. But the purple is super oversold because the purple is more reactive. So it doesn't necessarily mean to go long right here. I mean, going long would have been a good strategy, but it's not like the type of long that you necessarily just want to hammer in, right? It's also in red money flow. So a little bit more risky there, right? That's a less high conviction. But down here, RSIs both low, even though it's in red money flow, bit higher conviction there. Bit higher conviction. And honestly, when you're going to end up getting these RSIs this low and tight anyways, it's going to be in red money flow. So let's actually look at this one right here. Was this a good buy? Yeah, decent buy, decent buy. Right here, split RSIs, red dot, decent short. let's see. Right here, so green money flow, green dot, that's usually a good sign for a continuation of an uptrend. However, split RSIs, right? So RSIs were really split right here. And it ended up not even like really going up too much. It just consolidating. So I'm trying to give you guys good examples of all this so that you're not really left confused. But the biggest things here are going to be the VWAP. The RSIs, honestly, I did not really use too much until recently. So the biggest things here are going to be the blue waves, the VWAP, and then the money flow. All right. So understand the VWAP basically follows price momentum, or not the VWAP, the blue waves follow price momentum. So they're going to look a lot like the price action more so than anything else really on Market Cipher. The blue waves are what's going to follow the price action. VWAP is pointing in the direction that price action might be going based off of momentum. Excuse me. Sorry, I just drank soda at Popeyes. Excuse me. And then we also have the money flow index. Yeah, I think we touched on that. So let's get into Market Cipher A right here. So we've got Market Cipher A. That's on the top of the chart. So we'll take out Market Cipher B. Market Cipher B I went over first because Market Cipher B is more of an important indicator. And then Market Cipher A. Market Cipher A I find supplementary to Market Cipher B. And what you can do here with Market Cipher A is use these EMA ribbons to determine what the trend is. So if the EMA ribbons are blue and white, it means it's in a nice bullish uptrend. If they're nice and gray, it means that it's in a nice bearish trend. So usually gray EMA ribbons will align with red money flow, and then blue and white EMA ribbons will align with green money flow. All right. So then they have different signals as well on Market Cipher. So the yellow diamonds, that just means bullish continuation. So it just means that the current candle is a bullish candle. It doesn't really give you any alpha into where the price could go. It just means continuation. The red dots are always the same as the Market Cipher B red dots. So you get a red dot right here on Market Cipher B. You get it also on Market Cipher A. Right here, red dot on Market Cipher B. You also get it on Market Cipher A. And it's always like that. Right here, you got a red dot. You also get a yellow X, right? And you also get it on Market Cipher A. So why did this get a yellow X right here? Well, if we look at Market Cipher B, you can see that it gave a green dot signal. There was a VWAP crossover, also pretty nice and tight RSIs. But what ended up happening was it didn't matter. Even though momentum was changing to the upside and basically curving back up, you can see it was selling off, curving back up. Then it just sells off anyways. So that's not normal price action. And that's where the yellow X comes into play. So it's always after a failed green dot signal that you'll get those yellow X's, which mean manipulation on Market Cipher A. The other things that you have are the blue triangles. That's just Market Cipher trying to predict tops. As you can see right here, it predicted the top pretty well. So that's good right here, pretty well as well. But it doesn't always work. So right here didn't work. Right here didn't work. So again, guys, Market Cipher A, not always as useful as Market Cipher B. All right. It's useful, but not as useful. The green dots, so you can see the green dots on Market Cipher A right here, basically meant nothing, right? It sold off right afterwards. Right here as well, right? It doesn't mean much. So I almost never look at those green dots. Sometimes it works, right? Like right here gave the green dot signal and it worked. It went into a nice uptrend. But sometimes it's just absolutely terrible and just really does nothing. Like right here, it gave it before a nice big trend. So I use those green dot signals if I'm long and Market Cipher B gives me a nice green dot signal, or Market Cipher A, excuse me, gives me a nice green dot signal. I'll be like, okay, that means I made a good trade. That means that we could continue. But other than that, I don't really care. So the next thing that we got here are the red X's. That's a short sell signal or an exit signal. So if you're long, let's just say you bought over here on these minus blue waves, negative blue waves, and you want to, and then eventually you're just riding it out. So the X, the red X, can tell you that the trend is done and to take your profits or go short. So it just means stop. Get out of the trade. You're done with it. All right? So if you're playing the daily chart and you bought right here, the red X is your time to, maybe take your profits. And you can actually set an alert on that. And you can set an alert for anything on Market Cipher. So let's go over that. You add alert. So you right click the chart, you press add alert, then you go to condition, you select Market Cipher A. If you want, let's just do Market Cipher A. So Market Cipher A, you can just do a red X. So whenever there's a red X, you'll get alerted. You can have these pushed to your phone as well. Market Cipher B, what I'm either going to do is blue wave crossing up, which is the small green dot, or I'll just do a green dot, which is the oversold green dot. So, for example, right here's an oversold green dot. So that would be the only alert that I would get on this time frame. But if we did the small green dot, it would alert here, 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 here, etc. So the oversold green dots, make sure you know the difference between small green dot and big green dot. What else do we have here on Market Cipher? That is pretty much it. And you can see why it's my favorite indicator now, because it just got so much to work with. It's a nice and sleek indicator. It could be overwhelming, for new people to understand. But if we're just comparing this to like the normal indicators such as MACD, RSI, I mean, they just don't compare. And the fact that you can use something like this instead, I mean, it's just absolutely crazy. I mean, the MACD somewhat follows the Market Cipher chart, but like right here, there's like a bullish divergence in the MACD. And there's not a bullish divergence in Market Cipher, but Market Cipher has it oversold. So I guess it's more of like, I guess it's like a combination kind of like an RSI MACD. I don't know. I haven't used MACD in a little bit, but Market Cipher, I'm telling you guys, fantastic. I mean, it completely changed my trading. So the way that I started this was started my whole like investing in, I guess it was short squeeze plays that really got me into it, really like grew my YouTube channel. I bought like an Ortex subscription first, I bought a Fintel subscription. I bought Unusual Whales thinking that this was going to be, what takes my trading to the next level. But it was Market Cipher. And before Market Cipher, I didn't even believe in technical analysis. I thought technical analysis was fugazi, right? It didn't make sense to me. I thought technical analysis was stupid. All right. Then I download Market Cipher and I start actually understanding technical analysis, and it actually started working. It was crazy. Another thing right here is you're going to want to change your candles to Heikinashi instead of normal candles. So the difference between, and this is the one thing I forgot, so we're going to go over this right now. So normal candles, how it's calculated is it takes the open, it takes the close, and then it measures all the price action in between, right? And then it'll look something like this, right? So if, a normal candle, let's just say it opens right here at 140 and it closes at 150, right? But it hit 160 as a high and it hit 120 as a low. This is going to be shown as a green candle for normal candlestick charts, because the close was greater than the open. That's just how they're calculated. If the close is greater than the open on that candle, it's going to be a green candle. If the close is lower than the open, then it's going to be a red candle, right? So it's a box and whisker chart. Heikin-Ashi candles are also box and whisker charts, but rather than using open close and high and low for that period, it uses different averages. So I'm actually not 100% sure how it's calculated, but you can see these candles, while the chart is in a downtrend, they're almost all red. Almost all red, right? So it's pretty good at predicting momentum changes. Right here, the first Heikin-Ashi green candle, it ended up predicting multiple candles of green momentum. So that's another way that you can capitalize off of this, just using Heikin-Ashi candles. I mean, I am convinced that, you take away market cipher, you take away all my other indicators, I can probably trade pretty well just using Heikin-Ashi candles alone. And obviously, because of market cipher, I was able to get better at doing all this, right? Just reading Heikin-Ashi candles in general. But they're there. I mean, like right here, you can tell that it's bearish just by looking at the Heikin-Ashi candles. And the more that you use it, the more you're going to just recognize the same patterns over and over and over again. All right. So, okay, I think that's it for Market Cipher. I think I've covered everything. We're 36 minutes deep on this VIP exclusive video right now. We're doing it in one take. So there's going to be some weird pauses where I cough or whatever. But now let's look at on-balance volume. So on-balance volume, I usually use it on Webull. It's either also known as OBV instead of on-balance volume. And what it can show, so what's important about on-balance volume is that it takes buy volume minus sell volume. And I think this can get a little manipulated, especially when dark pools are involved, because it's not necessarily just going to calculate precise on-balance volume if a buy is coming in as like a sell, but it is somewhat useful. And a lot of the times I've used it to predict breakouts. For example, right here with AMC, what we can see, this is the one chart right here where I'm seeing like an actual opportunity in on-balance volume. Let's just pull up AMC minute chart. All right. So you can see that on-balance volume has been trending up throughout the day. In price action, excuse me. Sorry, guys. Price action has been more or less flat since, since like the beginning, since the middle of the day right here, about 12 p.m. Price action's been flat. Let's box it up. It's just been trading in this little channel. But when looking at on-balance volume right here, it has actually been moving up. It's been moving up. So from this point over here, on-balance volume was trading at minus 150 million. Right here, it's the exact same price. On-balance volume is at minus 864,000 on AMC. So there's an imbalance of about, you take the old number of minus 1.5, you subtract minus 861. Let me just do some mental math. So 0 minus 1.5, and we'll just add in, because if you subtract the negative number, it's basically addition. So we'll just add in 861.861. Boom. So that's an imbalance of about 639,000 buy orders over sell orders. So if more people are buying the stock and the price is staying the exact same, then that means you can maybe predict a potential breakout. So I would not be surprised if AMC closes here above 1564. And that would be called bullish divergence. Okay, sorry. So this isn't necessarily bullish divergence because it's been going flat while on balance volume is going up. However, if the chart was downtrending, so the chart's downtrending while on balance volume is up, that would be bullish divergence, and that's where you can get a good opportunity. So on balance volume isn't really too hard to explain. It's literally just buy volume minus sell volume. And if on balance volume is going up and price is not going up, well, it means that you can probably get shares for a discount before they do start to go up, right? Now, the problem with on balance volume for meme stocks is that it just stays high. There's this huge imbalance of buy orders over sell orders, and there's not too much explaining as to why, because every single stock looks like this. We take BBIG. There's actually been a ton of selling on BBIG compared to AMC. If we take GameStop, I mean, GameStop's obviously going to have super high on balance volume right here. If we take, I don't know, Bed Bath and Beyond, every single meme stock, right? It has super high on balance volume. But if we look at something like AMD, which was our example earlier, it's on balance volume. It's actually showing some good bullish divergence here, but its on balance volume follows price action a little bit better. Things that just aren't shorted, S&P 500, it's going to show on balance volume a little bit better. What I actually find with the S&P 500 is that sell volume, when the market is selling off, volume is a lot higher. So the S&P 500 might actually act a little opposite of meme stocks, because while sell volume gets really high when the price is coming down, or volume is just really high when the price is coming down, meme stocks has the opposite. Volume is really high when the price is going up. But the same strategy applies on both of them. If there's bullish divergence, it's bullish. Right now, there's actually bearish divergence on SPY on balance volume on the daily chart. So that could mean that we're in for another leg down, right? Basically the same on balance volume as it was right here at all-time low. So maybe that means that SPY is not doing too hot right now. Yeah. So that's how on balance volume works, right? It's very simple. It's buy volume minus sell volume. So if you want to know if more people are buying than selling, then you can use on balance volume. And people love to use it for meme stocks because they think the price is being manipulated. And they'll look at on balance volume and be like, hey, more people are buying than selling. Why is price going down? Another example right here would be BHAT. Like today, the reason I entered into that scalp earlier was because on balance volume just shot up today. And there's still a big imbalance here. I mean, it's down 3% on the day, and there's just been way more buying than selling. So this could be a very good opportunity. This is what I meant by bullish divergence. So that AMC chart was not bullish divergence, but BHAT, clear downtrend in the price action, but on balance volume is clearly up. So it does present itself with an opportunity. Even though intraday, since the top right there at 380, it's been coming down. So that's why I actually scalped in earlier, right? I bought in like over here just because of the bullish divergence in the on balance volume. So it doesn't always work. Market Cipher is a little bit better. Market Cipher was saying to not jump the gun. I decided to do it anyways. So I made a mistake there. But that's your tutorial. I'm trying to think of anything else I could add in. You probably don't even want to stay here anymore. But, if you wanted to download Market Cipher, again, it's in the free resources tab of Hoop Money Discord server. So check that out. That's all I got, guys. I'll see you guys later. Have a good weekend. Peace out.